You're listening to The White Rabbit, conversations on the art of presenting in a rather noisy world. Your hosts are Matt Krause and Alper Rosanes. Matt helps leaders of international companies speak, write, and present with confidence. Alper is a communications trainer and a startup investor with a diverse portfolio of companies in Barcelona. If you like this podcast, please share it with friends and colleagues. Now, on to Matt and Alper for today's conversation.
Alper, today we have a guest, Memet Yazici.
Yes.
Memet runs a private equity or private investment and advisory service called TRPE. The company is based in Istanbul with offices in London and New York. I initially met Memet about 7 years ago when my podcast co-host and I interviewed him for a completely different podcast on a completely different topic. And I was very impressed by how articulate and well-spoken Memet was. So thank you, Memet. It's a pleasure to have you with us today.
It's a pleasure to be here.
And Memet, before we get into today's topic, before I forget, tell our listeners if they want to get in touch with you, where can they email you or how can they find you?
The best way to find me without remembering anything is LinkedIn. And my LinkedIn address is quick, linkedin.com/in/Memet Yazici, or just look for Memet Yazici. Just do not put an H in the word Memet, and you should be able to find me there. And I check my messages on a daily basis.
Okay, thanks, Memet. So before we get started, here's a heads up for many of those in our audience. This interview today is ostensibly about the difference between private equity and venture capital audiences in the management meeting. But to those of us in the non-investment world, the takeaway from this episode is something that is very near and dear to us here on the podcast. And that is the importance of getting to know your audience, not just thinking that you know your audience, but really getting in there, talking to some of them directly, going one-on-one often before your actual presentation to find out what they are really concerned about, not what you think they are concerned about. Many of us in the non-investment world, if we heard the words private equity and venture capital, we would think, oh, whatever, they're all investment guys, they're all finance guys, and we would lump them all into the same bucket. But here's one of those guys today, and he's going to tell us that the two groups that we just lumped together are actually very different. And if we don't recognize that difference, our presentation is going to fall on deaf ears. So anyway, thanks again for joining us today, Memet. And Memet, before you talk about how the expectations from one of these management meetings are different depending on the audience members, please back up for a second. And for the sake of our listeners who are not familiar with the funding process, just give us a few sentences to give us the basics on what a management meeting is.
Sure, with my pleasure. Let's get things straight first. A management meeting is a meeting between an investor and the management team or the company that's looking for the investment. And usually it's not the first investment, it's not the first meeting, it's not the introduction meeting. So there has been a meeting before, or maybe two meetings before, where people have met each other, people have a pretty good idea of what the business is about. And this meeting is a meeting before which the investor has created a point of view about this business, is already thinking that this business is interesting and maybe an investment opportunity. So as a result of this meeting, the investor is about to decide, should we continue? And then the result may be a term sheet, so an offer to invest, a due diligence process which the investor will go into detailed research about the company and the company's finances, or a letter of intent where they formally express their intent to make an investment, if everything goes well. Mm-hmm. And fundamentally, I've spent too many years as an investor. What I try to understand is two things. I want to understand the business well in detail, so I can actually decide whether or not to move forward. And I want to get to know the management team. And I'm trying to answer basically two questions. Well, is this a good investment? Is this a good business to invest? Is the business okay? And then are these managers or the people in charge are the right people to deliver the results that we're looking for? So that's the overall what the management meeting is all about.
Okay. And you've mentioned that the audiences are different according to, whether they're venture capital people or whether they're private equity people in the audience. So tell us more about that.
Sure. And also, let's make sure that we understand what these two definitions are. Private equity is an investment fund or investment vehicle that's looking for a mature business.
Okay.
A business that has proven itself, has a history of cash flows, a history of market share, and a stable environment that it's operating in. Venture capital is looking for an earlier stage business, which may or may not be producing revenue. It has a technological innovation that's probably looking to change markets, but it's a challenger in the market, and it's a fairly small company, a fairly small team, and a fairly brief business history, which may not reflect its financial potential. So as a result, the participants in this meeting are different. The expectation of participants in this meeting are different. So in a private equity meeting, the investor is looking to meet the CEO, the chief financial officer, the person who's leading the technology or the product, and if it's a highly sales-oriented company, a chief sales officer.
Okay.
And none of these people have to be a founder or shareholder. So shareholders may be different.
Okay.
So fundamentally, we're looking for professional management who's running the business to be taking the questions.
Okay.
And for private equity, this is important because once you made the investment, you're going to be working with these people. So you want to understand who these people are and how they're operating.
Okay.
On the venture capital side, usually the managers and the founders and the majority shareholders are one and the same. So I'm trying to understand who these founders are and and what are they passionate about. And maybe let me point out something that I would point out later on, right now, and that is in private equity, I can love the business and still acquire it if I don't love the management team. But in venture capital, I first have to fall in love with the team. Because the business is still early and not so mature. So the people who are going to make that business mature are the founders. So very fundamental difference in the private equity business. It's the manager's responsibility to showcase the business itself. And in the venture capital meeting, it's the founder's responsibility to showcase the team and sell the team, so the business can also be bought by the venture capital investor.
Okay. That's a great distinguishing factor and very important to keep in mind before these meetings.
Yeah, and also the point of view, the perspectives of the investors are different. So depending on who you're meeting, I mean, as you said in the beginning of the podcast, Matt, it's very important for the presenters, the management teams or the founders, whoever they may be, to get to know their audience in advance and pre-customize some of their pitch parts, pre-customize some of their questions. So every investor has a track record somewhere. It may be their previous investments, it may be their website, it may be news clippings about them. And you should really spend some time getting to know the company as well as the people that you're going to meet in these meetings. And a lot of times the investor also will tell a story during the meeting when they
Okay.
introduce themselves. My if I have one important input for the management teams, the previous track record of the investor is always more important and more indicative than what they tell you during the meeting. So fundamentally, understanding the investor's track record and what they've done before. Do they have experience in your industry? Do they invest in the same geography, in the same business with similar people?
Mm-hmm.
Is very important, so you can assess how serious they are and
Okay.
what type of fellows they will be if they invest.
So let me see if I'm hearing you correctly. So not just one story is being told, multiple stories are being told. The management team is telling a story and the investor is also telling a story. Did I hear you correctly?
Mm-hmm. Yes.
Okay.
I mean, although it's a management meeting and 80% of the work is done by the management to
Mm-hmm.
showcase themselves and showcase the
Mm-hmm.
business, it's
Okay.
also an opportunity for the investor, especially for situations where there are multiple investor candidates,
Mm-hmm.
for them to showcase themselves. Because an investment is a partnership. It's likely to be a very long partnership.
Mm-hmm.
So it's important that both sides see eye to eye and both sides are a fit.
And I've got a question for you. You mentioned a few moments ago, you mentioned the importance of the management team doing some research before the meeting, looking up the investor on Google, looking up the articles about the investor, kind of learning what is the investor's history. Is it okay for the management team members to reach out to the investor directly and talk to the investor? How does that work?
No, not before a management meeting, because the
Mm-hmm.
management meeting is the opportunity, the platform to have this conversation. If you know anyone who has worked with the investment firm before as an investee or as an advisor, etc., it's
Mm-hmm.
perfectly fine to reach out to those guys. And if you
Okay.
have common friends, reaching out to those is fine. It shows, and even if they hear about it, it shows
Mm-hmm.
that you're interested. It shows that you're doing your homework, and it's a positive.
Okay. And Alper, I have some more questions, but I don't want to hog the stage here. So, do you have any questions at this point that you'd like to jump in
I
with?
have 95 of them since we got an expert on the podcast.
Excellent. Go
I
for
want
it.
to start with the basic one. Mehmet, I hear often that in the entrepreneurial ecosystem, the scarce resource for the entrepreneurs is money. Of course, they're seeking money, and the scarce resource for the investors is time. So, as an investor yourself, could you run us through your first initial impressions when you meet with new management, for example, or a company who is pitching to you, who is presenting to you? What goes through your mind in the first several minutes, or even the first 2 minutes of that interaction?
Does the story fit the storyteller? That's the most critical element. So if I'm pitching a story about an ambitious growth story, is this person or is this management team capable of delivering on this, or are they just regurgitating a story? Are they telling me a story that they copied from somewhere else? So
Okay.
I'm looking for consistency and a track record that matches that consistency.
That's interesting. Have you ever found yourself thinking, well, maybe this pitch is way too much rehearsed. It sounds almost like a canned performance. Did you ever have that feeling?
Sure, I don't mind that as long as it's helping me understand the company. It's fine. Somebody who's well prepared, and if you're having management meetings 15, 20 in a row, by the end of it, you're on autopilot, which is fine.
Okay.
It's fine to be well prepared. However, one thing I have to differentiate is, the story. Let me take your questions for my answers. Whatever question I ask, you will give me some answer that you already prepared, which may or may not be relevant to my question. I don't like the canned response to those. If you can show me that you're really listening to my questions and understanding what I'm worried about to learn about your business, then I'm all for good preparation.
Okay.
It saves time for both sides.
Okay. But like I said, I have more questions, but I'll leave the floor to you before I move on to the next one.
Yeah, Mehmet, you mentioned a few moments ago the difference between VC venture capital management meeting and PE or private equity management meeting. And I'm wondering, do you run into a lot of people who don't make the transition well? You know, they've gone through a venture capital meeting, but they're not listening to the new reality of the PE capital meeting or the PE management meeting and what that meeting needs. And they're not making the transition well. Do you run into that very often?
You do, especially in some geographies where the same investor may be or may play the role of both PE and VC investors, and sometimes they have pockets. It's also not always the case where the management or the founder is confused about this. Sometimes the investor itself can be confused.
Okay.
And so we do run into this. And I'm not shy about making my point, what our perspective is, because it's important to understand the difference in perspective. Private equity is likely a single investor who's going to take majority control or will want a board seat, is going to be very involved. You'll see that person on a monthly basis, and you're not going to have 15 representatives of that firm with you. So you'll be spending a lot of time getting to know this person. On the VC side, you may have 10 or 5 or 6, 7 different investors, and the VC firm makes tens of investments, sometimes hundreds of investments. So they don't have time to deal with you a lot afterwards. So, so what they are trying to get out of this meeting may be very different. And if you start pitching them the wrong thing, they're going to get distracted and kind of lose you during the meeting.
And in your experience, what typically happens if someone doesn't make this transition well? They for example, they've done VC meetings before and they think they know the territory and they do the same thing and it doesn't go over well at all in the new management meeting with the different audience. What typically happens to that person?
If the investor is interested in the business and they really want to know, the investor will take command and will try to write the conversation by asking a lot of questions.
Okay.
So ask a lot of questions and get them right to do. If the investor is losing interest because they think they're going to have to dig really deep to get any information out of this person, they're going to cut it short and the opportunity is going to be lost.
Okay.
So it's important to obviously keep the pulse of the audience during these meetings. It's not a concert. It's a conversation, and it's as critical to understand what the other side is thinking, doing, or twiddling their thumbs, or really listening to you intently. And so making sure that even if you have gone away from the rhythm of the meeting, it's good to ask, are we doing right? Are you getting all the answers somewhere before the end of the meeting to the investors?
Okay.
And I have some recommendations to make sure that that happens as well.
Okay. And Alper, it's about time to wrap up for the day. But before we wrap up, do you have any remaining questions that you would like to hit Mehmet with? Go for it.
Yes. And actually, I think it would be in line with Mehmet just mentioned about the recommendations, because I really liked when you mentioned in one scenario, for example, you have to fall in love with the management. And I would like to ask you, what are 3 things, for example, you would recommend? Let's say I am meeting with you, I want to pitch you my company, I'm seeking investment, but I don't have much experience in these meetings. What would be your 3 most crucial recommendations that I should definitely keep in mind if I want to make a good impression on you and have your interest on a high level towards me or my project?
Yeah, I mean, 1, make your answers short and concise. Answer the question, give specific data-based answers, and let them probe. So be short and sweet in your answers.
Okay.
Second, be open about your strengths and weaknesses. Be honest. So, and
I like that.
be transparent. And I would say two additional things. If you ask for three, I'm going to give you four. Although I love the rule of three. Stick to the rule of three. If they have a question, give them three answers. Give them three examples. Give them three targets. That rhythm, one, I'm going to tell you about this. Two, I'm going to show you. Three, I'm going to make sure you understand. So rule of three, I really like because I can remember
Me
that.
too, yeah.
And last but not least, do not blame others. Do not complain. This is not the place. Even if you were shot on the way to this management meeting, do not complain about it. Just go stick to your job.
Just carry the bullet wound into the meeting and do your job. I like that. I like that. Thank you. Those are pretty good responses. I love them.
All right, Alper, what do you think? Should we wrap up for the day?
I could go on for another half an hour, but I don't want to hog Mehmet's time either.
Yeah, definitely. I could also go on for at least that long a time. Well, but anyway, so we'll cut it short. So thank you very much, Memet. Much appreciated.
Thank you. It was a pleasure for me.
Yeah,
Thank you very much. Yeah.
Yeah, it was a pleasure having you on the podcast. And Alper, I will see you next week then.
Talk to you next week. Take care.
All right, take care. Bye-bye.
Thank you for listening to The White Rabbit with Matt Krause and Alper Rosanes. You can subscribe to the podcast on Spotify, iTunes, or through your favorite feed.